So there will be short-term and long-term impact, I think, and the short-term volatility that we observe is only natural given the scale of the events that happened last Friday, that investors are spooked. But that's short-term, and we have to keep in mind that that's going to be the case. In the long term, what's important is whether Turkey will be able to reestablish the principles of democracy and the rule of law. And so long as that's the case, and these are the messages sent by Deputy Prime Minister Mehmet Şimşek and the Central Bank Governor Murat Çetinkaya, so long as that's the case, then there should not be any long-term impact of these events for the government. I mean, hopefully, with this major event, when everything is going to change. Silly things like in Taksim, the soldiers went to... Turkey does have a current account deficit, and investor sentiment is important, but if you think about it, this horrible event took place at a lucky time where global liquidity is abundant. Like today, there is the ECB decision. They're going to continue with their quantitative easing. Bank of Japan, likewise. So when there is so much liquidity in the system, there is less of a concern about whether Turkey will be able to finance its external debt. We're going to see it anyway, but it's too soon to reach quick conclusions.
Yeah,
I mean, in Turkey, as you know, the debt to GDP ratio is pretty low, and that's one of our advantages. So the government is hesitant to change this with too much of an expansionary policy. But in my view, at times like this, at extraordinary times like that, it wouldn't hurt if you do loosen your budget a little bit. The money comes when interest rates are high, and it leaves overnight when interest rates go down.